Good morning. Welcome to the Meltdown. Now, folks, I got to tell you, it's a beautiful day down here in the south. I certainly wouldn't want to be trying to thaw out up in the northeast. Prayers go out to you folks. I hope that the logjam of flights changes pretty quick. I want to tell you that I'm listening to what's happening in the world. And while not somebody we got to vote for, Rick Santorum, when he was running in the primaries, before Mitt Romney got the ticket, made it very clear that the middle class is being squeezed out. It's an important point because under quantitative easing, the monetary policy that has affected the world is that the rich get richer, the haves get more have, and the have-nots, the middle class, according to Santorum, is going to be squeezed out. So you're either going to rise like cream to the top, or you're going to fall into the have-not class. Now, I can tell you this. If you're sitting on $1 million or $2 million, today, that may seem like enough to quote, stay in retirement. I remember a great uncle, Uncle Max, lived down in Boca Raton. He founded Boca Raton. I know that Arthur Vining Davis and Meisner get a lot of credit for it, but my Uncle Max was in Boca Raton in 1933, where 8 miles off of the beach was, quote, the Everglades. Well, now that property is worth a ton of money, but that having been said, Uncle Max set up the first motor lodge, motel, a grocery store. And at that time, Uncle Max was in his mid-30s, I guess. He retired in 1964, and 2 years later determined and was able to assess that his trash collector was making more money than he was. So by the 1970s, 80s, my dad was in a place to understand the bond market, moved money around, kept Uncle Max in retirement another 25 years. Things change, and they change over a generation. And so what we are experiencing today is just the beginning of another bubble. The market was strong in 2000, but the 2004 to 2006 range, the Dow as we know it was fairly flat. It wasn't a time of growth. Central banks kept the brakes on and didn't do anything to change it. Well, of course, we all know in 2007, 2008, and 2009, the bubble blew and everything was in chaos. People lost 40% of their retirement. Now you've gotten it back and you think you're doing really well, but the dollar's losing value. Not only is the dollar losing value, but along the last year or so, the Chinese have managed to get out of about 50% of their dollar-denominated transactions. At one time owning almost $3 trillion down to about 1.3 trillion. They are cutting their losses in the dollar. They're getting out of the position. The dollar is going to lose its favor. There are stronger currencies to be trading in. And I had this conversation with a good friend this morning, and he was talking to a client of his, and you know, the man's gone through the cycles. He's been in the ups and he's been in the downs and over the long haul. An assessment of equities markets, the stock market, and metals markets. And as I pointed out yesterday, the long positions total in excess of 41 million ounces. There's only about 400,000 stashed in the warehouses. How would we ever make delivery of all the gold if everyone said, okay, deliver it? Folks, that's why tangible gold is so important. It's so important because it's real money anywhere in the world. Whether you own a $20 gold piece or a $5 gold piece or a 1-ounce bullion coin, you can trade in the world currency that you want at that moment wherever you're at, and everybody recognizes it. Central banks buy gold for storage purposes. There was a time the U.S. government had 10 billion ounces of silver. They don't have any. None. Only what's being processed, and those are through vendors. The planchets, the blank coins have to be produced. The U.S. Mint does not do that anymore. They farm it out to other companies. Heck, I deal with a refiner who has a contract to sell all of their gold to the Royal Canadian Mint, period. Now, I've been in this business a long time, and I've seen companies come and companies go. And the internet has only created more people that have more access to more information. And whether the information is right, that doesn't matter. It's all about selling. That's not true. The idea behind a third, and a third really is to put a position in place that starts with the word diversification. This is not gloom and doom. I'm not trying to provide financial advice, not in any way. I'm not registered for it. I'm not licensed for it. But what I can do is I can assess the fact that people look at their portfolio. They're tired of the low return on CDs. Of course, that's taxable. The bond market seems like it's starting to move a little bit. But ultimately, I look at what's happening in collectibles, the other markets. The fact that there was a automobile that sold out at an auction that's held annually in Scottsdale, $8.8 million. Big numbers. There's a lot of material like that. And what I'm going to tell you is that when you look at tangible assets, cars, real estate, jewelry, any of that material, people are trying to figure out how to get themselves out of the position of paper. The dollar over the next 20 years or so will lose its favorable status as the world reserve currency as the Chinese continue to grow their economy, growing easily double, maybe triple what ours is. Now, they're in a bubble too. They've got problems. But you know what? They're not letting gold out of sight. They are building their positions. They understand the market and the economies of the world. They understand that everybody has rushed to get into a position where they can float their debt. That's all that's happening, is they're floating it. Why should you be buying silver and gold? It's simple. It's barterable. It's been around for thousands of years. Back to the pharaohs that buried themselves with tombs full of gold. I'm telling you, get into silver. And I'm telling you that because the ratios indicate that the gold to silver premium will continue to provide the biggest rate of return over the long haul. It's an early trading day right now, and there are several different companies that provide the statistics of what markets are doing. Now, I'm looking at one right now that's trading on a 10-minute delay. But that having been said, I'm looking at the Dow down. I'm looking at gold up 40 cents. That's 0.03%. Silver is up 4 cents. That's 0.18%. If you're going to play with the numbers, that's a 6-to-1 movement. Now, I'm not happy about a 0.03 return or a 0.18 return. But in the conversation I had with this friend of mine and his client who was talking about why hasn't gold moved, you've got to remember that the traders, and I talk about them often, Traders, trader, not traitor, traders are trading with millions, hundreds of millions, borderline billions of dollars. And when they see a rate of return over a 2 or a 3 week period, and they can make 5 to 7% on that kind of money, you pull the trigger, you get out, you take the profit. Move the price of gold from $1,180 to $1,255. Doesn't seem like, I mean, I know dealers, I know the guy who's calling is probably telling you, oh my gosh, here we go, we're going to the moon. He doesn't know. All he can see is over the last month, the last year, the last decade, what the cycle has been. If he's looking that deep, for me, it's to understand that these markets are volatile, and diversification means that you move money into tangible positions that will provide you a rate of return over the long haul. And that's how we do this. It's not complicated. It's not gloom and doom. It's not, the sky is falling. It is methodical. It's logical. It's clear. It's concise. There are different types of coins that go into a portfolio based on your age, your goals, your objectives. That's just logic of time that I've spent in the industry. There are reasons why you own $1,000 coins, $10,000 coins, $100,000 coins. But obviously, you probably are, quote, in the haves, not the have-nots. And so for me, I want to be able to relay to you why we do different things. The demand in China for gold is moving higher, and the lower the price of gold gets, the more the Chinese will buy. Morgan Stanley doesn't make a lot of money selling gold. So they and Goldman Sachs and all the other, quote, brokerage firms are not going to tell you to buy physical gold. They're just not going to do it. That's not their mechanism. Their mechanism is to get you to trade in futures markets where they can make some money. And that's the way the traders look at it. Now, if they're on the floor, they're just too busy processing. But, you know, when I was growing up, there was paper on the floor. Today, you never see paper. We're too digital. Things can be moved around extremely quickly. And I look at the 10-year Treasury. I understand that the market's changing. I understand that Ben Bernanke is leaving office shortly. I understand more that Janet Yellen is coming in. And her theory is pretty much what Bernanke's was, except that it's not time to pull the trigger and back off and start tapering. Markets change, and they change in a matter of moments. So from what I just said 2 minutes ago about gold, we're now trading down $1. Silver's down 1 penny. And so my point in all of this is that if you're going to sit at the computer screen and you're going to trade digitally, what I'm telling you is that short-term money is looking at a short-term result. I'm looking over the long haul. The same thing your stockbroker said to you in 2008 and 2009. Oh my gosh, don't flip out. It'll come back. Well, of course it'll come back. They're going to manipulate it so it does. Same thing that the banks are doing. The banks are getting away with murder. They're taking your money, they're putting it back out in the form of a mortgage or loaning it to somebody else. You get a pauper's return on investment, and they're making all the money because look at the bank stocks. Look how much money the stocks are earning over a year's period. JP Morgan may have to pay a $13 billion settlement in the fiscal year, but the shareholders are making money and they're getting it. They're getting dividends. Now, I don't want to just pick on JP Morgan. It's across the board, 3,500 stocks. Companies make money and companies lose money. And there's all kinds of mismanagement and people who do things that they shouldn't do. You know, we pray for all the people that are being affected by the outcome of others. But funds are being built, rare coin funds. There are bullion funds, there's GLD, there's SLV, but there's rare coin funds now, and they're coming back into vogue because the haves are taking those positions. And it really doesn't matter what they're buying, what they're selling, because when you get right down to it, everything moves for a reason. Anyway, my point in talking about all this is that you should be buying silver, Morgan silver dollars. Sorry, that was like a double silver. I love Morgan and Peace dollars. I love them from the range of $30, $35 all the way up to tens of thousands of dollars. I like coins when they get to be rare or expensive. I want them to be graded by NGC or PCGS. Those companies trade on computer networks. The bids are just like anything else out there. I'm willing to pay $1,000 for something that's worth $10,000. Now, I'm not a bidder on CCE. Dealers put up bids. If you want to watch and see what things trade for, you can watch the generic market or you can watch a specific coin. Anybody would pay $1,000 for something that's worth $10,000. So the bids are just bids. And dealers who have money are willing to put up a bid because they are always willing to buy cheap, period. It just makes sense. Now, I can tell you from the standpoint of this is what we own, this is what we can get our hands on, this is how you build the portfolio. It's always about a third, and a third for me. I love owning the least expensive premium that makes sense to put into the portfolio. I love silver. I talked about Jackie and Cindy, and these are people who were highly leveraged in gold. When the market returns to its previous high, gold will go test $1,924. It's 50%, a little over a 50% return. For silver to get back to where it was almost 50 bucks. That is a 250% movement. I want to play 5 to 1. I want to own silver. I want to own it from bar form all the way to rare Morgan silver dollars. And if you can't digest the $10,000 coin, then you buy the $500 coin. And you add them quickly. Because, folks, I'm going to tell you that the herd is going to turn. And when the herd turns, everyone's going to want to own a piece of this, and everyone is going to be clamoring to get metals. There's not enough of it. Today, there's enough. I can't promise 2 weeks from now or 2 months from now, and sure as heck I'm not going out 2 years. I'm going to tell you that the markets are cheap, and when they're cheap, you buy. But Brett, what if they go lower? Well, if they do, you'll be just like the Chinese and you'll be buying more gold. They're getting out of dollars and the world is getting away from the dollar. We are losing favorable trading status. Iran, Iraq, take the Middle East. They don't want to be in dollars. Not sure they want to be in, quote, the Chinese currency. But you know what? They don't want our units. They love gold. Heck, there's gold vending machines popping up around the world. And broken gold, you don't have to chase that market. That one's dried up. Companies are going out of business because they opened up to take advantage of the fad. Folks, this is that time. And I know it sounds cliche, but you want to own things that other people are going to want 5, 10, 20, 50 years from now. And if you're young enough, congratulations. I hope you're on the have side. I hope you've got the ability to see currency and be able to move it around. Take your stock position and pare it down a little bit. If you've got profit, take some of the profit. Anyway, I'm going to cut the show short today. I've got meetings beginning at 10 o'clock and then I've got a 2 o'clock. This is that time where you talk to your spouse, you talk to your financial planner, your money manager, you look at what's not performing and you move some things around and diversify. It's important. Anyway, if I can help you, call 281-548-2646. Option 0, if I'm around and not tied up, I'll be more than happy to take the call. Kelly is out this week. She's on vacation. So it's not going to be possible to get to everybody, but please email me. That's Brett, B-R-E-T-T, at thegoldexchange.net. Brett with 2 T's at thegoldexchange.net. Folks, there are over 500 shows, 370, I guess we're probably approaching 380 hours of audio. The commercials are taken out. We've edited them down from the time I started doing radio to now doing podcasts. Ultimately, the time to be doing things different really is right now. I never get off podcasting without talking about Texas Children's Hospital, and then I'm going to add a foundation, and I'm going to talk to Michael afterwards to start doing some design work on another charitable entity. At Texas Children's, it's the Myers Center and the Ronald McDonald House. If you visit themeltdown.com, there's donation links. The information is anonymous for me. You'll get your 501c3 charitable receipt so you can take it off of your taxes a year from now in April. Ultimately, call 832-824-8600. It's 832-824-8600. If you can provide 20 to 40 hot meals for the people that stay at the Ronald McDonald House at night, I know Nancy Yellen and her staff would be thrilled to assist you. Of course, the Myers Center deals with disabilities. My son Jason has very mild Downs, but whether it's Downs, spina bifida, autism, Dr. Ostermeyer and her staff are there to help the kids. The other charitable source that I want to talk about for a moment is There's an organization, I'll get the exact email and we'll get a banner built, but Hope Ewing helps with needy families and getting diapers to low-income families. So we're going to help get that put together. Michael will work on it. We'll get a banner up. I know he's going to holler at me a little bit because he's now got to squeeze my homepage a little. But folks, there are people in need. I want you to be able to reach out and help them, whether it's for $5, $500, $5,000, $50,000. I don't really care. Kids need our support and our love, and so I'm out there trying to find the ones that need the help the most. God bless you. Thank you for listening. I hope you'll take some notes and email me. I look forward to chatting with you soon. Have a great day, and God bless you.